Hey, day traders, stock market fans, and investing enthusiasts from around the world. My name is Jeremy Alexander Newsom, and I'm with the company Real Life Trading. Hope you're doing absolutely majestically marvelous. I want to make this quick video because it is going to be revolutionary. And I got a few text messages about it recently because 2019 has been the best year of my trading ever so far. And there's a lot of year left. But realistically, a lot of people are asking why. And I did make a few small tweaks and changes to the approaches that I use for exiting trades. So in this video, we're gonna be discussing when to exit day trades early and when to hold the winners. It's gonna be a really great video. I trust you're gonna learn so much in this video, and it's entirely free. So let's dive in, check it out, watch it as many times as you want, share with as many friends as you want, and let's make some serious money together. And with that money, let's enrich lives from all over the world. You rock. Let's go into the studio and get this knocked out. You guys ready? Here we go. All right, beautiful. I'm here in the studio and we're gonna be discussing a great topic for today. This video has been requested numerous times, but specifically, I got this message from a friend of mine who texts me and emails me quite often about trading and just asking great questions. His name is Jay Berman up in the New York City area. And actually, I'm making this video a few minutes before I go out and pick up a trader who's driving over from North Carolina to spend about 4 to 5 days trading with me here in Nashville, Tennessee, in a pretty intense boot camp, live day trading, intensive, immersive experience. It's going to be quite incredible and really looking forward to that. Anyway, let's dive in and talk about the very specific notion of how to hold a winning trade and when to exit. All right, so when to exit early and how to hold your winners. I'll make this in video format. One of the things that I have found to be quite interesting, especially in day trading, and that's really what we're focusing on in this particular video. There will be other videos in the future about swing trading and potentially longer term investing. But bottom line, one of the terms that I've coined is patience, spelled with a Y, right? Get paid to be patient. But the cool part is there's a lot of times where a trader will actually be too patient. And there's a beautiful determination and a distinction between being too patient and being not patient enough, being aggressive and being not aggressive, because there really is that flow, that ebb and flow of I need to lock in some profits, but I also want to hold my winner. So where is that distinction coming from? Here's what I found. In my day trading, if I could spell it, that'd be great. I use pretty wide stops. Now, I guess we can define wide stops in a moment, but I think you all kind of know what that means. I use bigger stops than most people. And that is because I am really good at losing small. My thought process is if I can lose small often, then I can at some point have a nice winner. And in the same notion, if I have a nice far away stop, the chances of me getting stopped out and actually losing on the trade are going to be pretty small. And if I do get stopped out on the trade, I can eventually increase my stop to lose as small as possible. Now, I will say all of this in conjunction with, please make sure you are familiar with the R strategy and the R concept, because I will be discussing that in this video in depth. So if you are not familiar with the concept I'm going to be discussing about risk mitigation, it is one of the most important aspects of trading. Hop over to my website, reallifetrading.com, come over here to risk management, and just type in R's. R''S, trading the R's. Make sure you have read and fully understand this article, because it is massively crucial in our discussion today and really any discussion in the future as it relates to trading and risk mitigation, because very, very few people and companies teach this properly, and almost no one on the entire internet teaches this at all. All right, so let's dive in. One of the things that I've noticed in my trading personally is I very rarely hit 2Rs. It's a pretty rare occurrence. In fact, out of 40 trades, I will hit 2R twice. I don't know exactly what percentage that is. I can figure that out in a moment, but that's usually what it is. So out of 40 trades. So on a 40 trade, I'm trying to think what was the term that would be, but out of 40 trades, here's what it looks like for me. 22 of them will be losers. Now this is an average over the course of like the last 7 or 8 years. This is not this year. 2019, as I mentioned just a moment ago, has been a little bit of an anomaly. And I think that's just kind of, I finally kind of cracked the code a little bit with exiting and entries, because I've really, really tuned it down this year. But anyway, on average, 22 will be losers. And those losers will be 0.7 Rs on average. Okay, 0.7. And the winners, I will have 16 winners on average. And those winners will be 1.4 R on average. So if we do some quick math, really fast. So 22 times 0.7. So this is the average amount of loss over a given month. 22 times 0.7 will equal 15.4 Rs of losses. And then the 16 winners on average will be 1.4 Rs. So 16 times 1.4 equals 22.4. The cool part about this is you can see, if you just do the math, if you just kind of process the math, we're already profitable just between that data set. And this data set is important because this is a nice small loss, and this is a good win, that 1.4 of average. So you're already profitable for the month just with those trades. That is actually 22.4 minus 15.4 is 7 Rs. Now again, if you have a $10 R, you probably will be breaking even because of commissions and things like that. But if you have a $100 R or $200 R, if it's a little bit higher, you're doing quite well realistically for the month, right? So if you have a $500 R, 7 Rs a month, that's pretty solid overall. Now, if you did the math, 22 and 16 does not equal 40, actually equals 38. So what happens with the other two? The other two trades, as I mentioned, is those come to 2R trades. And those 2R trades really, really factor in nicely, because if I hit 2 Rs on 2 trades a month, that is 4 Rs. And if you add 4 to 7, you get 11. And that's a really beautiful month. Now, that is oftentimes a very consistent approach for how I personally trade. That doesn't mean that anyone can't be different. That doesn't mean that you can't do better. That is just what I do and what I find myself doing on average the vast majority of the time over the last 7 or so years. In this particular environment, I think it's really important to understand that some months can be better, some months can be lower, some traders can do better, some traders can do a lot worse. But this is really a good average. If you can just strive for this, okay? If you can just strive for this approach, 40 trades a month, 22 of them are going to lose 0.7, 16 are going to lose, you're going to make 1.4, and then 2, you're going to hit 2 Rs. If you can do that, these numbers should be the same. And if you can kind of think through that and really try to apply yourself to make that your possible outcome, that is a really fine approach. Now, if we're discussing some interesting math, let's kind of go back through it, because really this entire process, if you think about it, is going to be math related. Most of your trades, if you again have any experience at all with real life trading, your risk should be 1R. And let's think about it this way. If your risk is 1R, if you have a big stop and you can eventually move that stop to lose less than 1R, that is your job as a trader. That is your job as a trader, is just to simply lose less than 1R. That's realistically that's your job. That's it. And a lot of traders will way overemphasize how much money you're trying to make. Your job as a trader is not to focus on how much money you're making. Your job as a trader is to focus on how much you are not losing. Really just do a great job of controlling risk. That doesn't mean to have a super, super tight stop, because if you have an incredibly, incredibly tight stop and you do lose that full R, then you didn't realistically do your job. Your job is to lose less than your risk unit when you're taking a trade. And I'm going to give you some real life examples, don't worry, but that really is an incredibly powerful understanding and concept. A lot of people way overemphasize risk reward. Now, what do I mean by that? What I mean by way overemphasizing risk reward is they'll never get out of a trade unless it hits 1-to-3 risk reward ratio. But if it doesn't hit a 1-to-3 risk reward ratio, they're like, all right, well, I'm just going to keep holding. And they see the trade working, and then it just reverses and they get stopped out and they lose on the trade, even though they were profitable. So there in turn comes a question, how do you know when to exit early? And how do you know when to hold your winners? Well, the answer is I exit early a lot. I exit early a lot, very frequently. And here's why. In trading, frequently. In trading, what's the one thing that you cannot control? I'll write this over here. In trading, what is the one thing you cannot control? Well, I could say one thing, but you can make it more than one thing. A lot of people might say market, right? You can't control the market. I would argue that it's the profits, okay? Because if you're in the trade, the market does whatever it wants. You're either going to make or you're going to lose money. But that's the one thing you can't control. If you want to say two things, that's fine. Can't control the market. You can't control profits. A lot of people think that, oh man, I have no control in my trading. I don't know what I'm doing. I am just taking random positions, taking random sizes. You can control all of that. As a trader, you can control when you get in, when you get out, how much size you get in with, how long you hold, what position you take, what stock you're trading. All of those things are in your control. The thing you cannot control is profit. So in the rare event, in the potentially massive rare opportunity as a day trader that you are actually profitable, you're going to want to keep that profit around. You're going to want to protect those gains. You're going to want to keep those profits in the bank because it's something that you cannot control. So when you begin to win on a trade, that is the beautiful magic that the market has given you that you are without control of. One thing that you can do very well, one thing that will help you hold a position is by exiting partials. If you are worried about commissions, commissions are part of the game. You're going to have to spend money to make money. That's okay. If your R is too small when you're trading and the commissions are going to eat you alive, either don't do this, right? Don't exit partials, or get your commission changed, or go to a broker that doesn't charge commission. There's a few of them. They're very, very inexpensive, or some of them that are free, and that might help. Or if it's still a situation where you have a problem, then just don't trade that small account and just add to it. Manually grow it by taking money from your job and putting it into your account. I have tons of videos on how to grow a small account. So one thing that's going to help you is to exit partials. My favorite partials are 1/10 and 1/4. These are my favorite partial positions to take. You can take other partials, that's fine. I know a lot of people who take 1/3. I don't ever take 1/2 personally. I don't think I've ever taken a half of my position off the table. I'll either take off 1/10, 1/4. A half is a lot. That's a big position to exit early because you're really going to give tons and tons of profit away if it actually starts working. So I don't exit 1/2. It's either 1/10, 1/4, or smaller. I've done 1/16 before. I've done 1/8. I've done 1/32. All I can say is these numbers don't actually matter. You can come up with whatever number you want. I don't personally suggest a half ever. Smaller than a half, and exiting the rest as you see fit. But here's kind of the key. Ready? Here it goes. This is one of the answers to your questions. If you are in a trade bullish or bearish, and in the bullish trade, the position makes a new high, exit a partial. If you are in a bearish position and the position makes a new low, exit a partial. I'll say at least exit a partial. Now, why new high or why new low? Think about it this way. The market moves in waves, right? So if the market moves in waves, when the stock or the position that you're in makes a new high, what is it likely going to do? It's likely going to have a little bit of a pullback. So if you're in bullish and the trade makes a new high, this is called selling into strength. Sell into strength. A lot of people buy into strength, but that's not what you want to do. You want to buy into weakness. Right? Buy into weakness. So when the stock is weak, that's when you're buying. When it goes higher and makes higher moves, that's when you're selling. That's the principle of the S curve, which a lot of you have already watched that video. So buy into weakness, sell into strength. When the stock makes a new high and you're in a profitable trade, that's when you can exit a partial or all of it. So what I'm going to do is I'm going to zoom in here to a trade that we took on May the 8th, and I'll do it on a 5-minute chart. And I'm going to kind of walk you through this particular trade, and we're just going to discuss it. So this is May the 8th. I'll turn off this. We'll keep the extended hours on. That's fine. And we'll just look at this trade. So this is match group. Very pretty trade. Very nice little move. And let me actually pull up the exact chart and everything. Because I'll give you an example. I didn't exit at this exact prices that I'm going to show you because I trade this on a 1-minute chart. So it doesn't specifically matter what time frame you traded on, but I figured I would at least kind of give you some of this info. So this is our trade tracking journal that we do for the trading room. This is the month of May 2019. And here's a match, MTCH. So I took it 63.60 by 62.30. That's over $1 worth of a stop. But let's kind of come in here, and we'll talk about it. But you can see some of the partial exits. So number of shares. This was on a $200 risk. That's what we use for the worksheet for right now. We're actually going to be increasing that next month. But 15 shares, 30 shares, and then 109 shares. So exiting them in partial positions. So let's just say we trade this on a 5-minute chart. It's easier for a lot of newer traders to kind of make sense of that. So a 5-minute chart, this was a bullish gap and go. Tons of people were trapped, and you have my favorite candle on the 5-minute chart. Favorite candle possible, high wave, bullish, indecision candle. You have all heard and seen me talk about this trade and the setup and this gap a million times. So if you're going to play it, your entry would have been right above the high of that candle, right? Nice gap up, high wave candle, and your stop would have been below the low of this candle. So this is 64.31 by 62.53. This is a massive stop. This is really big. So if we're talking about this, this is almost $2. So 64.31 minus 62.53 is $1.78. So this was what I would argue is a very large stop. $1.78 stop loss. Well, here's where it gets cool, okay? If you have a big stop, what that should mean for the vast majority of traders is it will be relatively difficult to lose a full R. I mean, if the trade would have to do this and really run through your stop, and if that happens, well, guess what? It will 100% happen. I do lose full R's on trades, although it's a little rare. It definitely occurs. It's just, like I mentioned, should be on the rare side. Now, here's where it gets fun. If you get triggered into this trade and the stock makes a new high for the day, so really anywhere in this candle, once you get triggered in, boom, the stock starts making a new high. Right around here on an intraday time frame, what did we do? We exited 1/10 of our position. Let's say you're doing a $200 R, and this one was 500. So let's say, again, your $200 risk unit, you have $178 of risk. That's 112 shares. If you're doing a $500 risk unit, your amount of shares have been 280 shares. Right? It's $1.78 divided out of those numbers. So with a $200 risk unit, you would have taken off about 10 to 12 shares here. That's 1/10. Okay, now let's discuss why you would have done that. The answer is very simple. It made a new high. It was profitable. It started running, and it made a nice little move. So secondary question is, could you have exited everything right there? Could you have sold your entire position at that particular level, right? Gotten in here, got out right there, and have been done for the day? And the answer is yes, you could have. The other question is, would that have been a bad thing? And my answer is no. No, it would not have been a bad thing. Obviously, we can see the stock went much higher for the day, but it would not have been a bad thing to exit all of your position right there. The bad thing would have been if you took another trade and ended up losing it. And that, my friends, is the key to what I'm talking about today. One of the keys. If you took this trade, you would have won, or if you took it long, you would have gotten like 0.6 Rs if you exited the blue line. Right when I make that new high, yeah, so right about let's say 0.6. So in 5 minutes, you could have made 0.6 Rs on that trade. So you get in, boom, exit everything, you're out. 5 minutes in, you make 0.6 Rs. I have done that a lot this year, tons of times. So taking a trade, bam, it moves really quick in my favor. I have a nice large stop. And remember, profit is the thing that you can't control. You cannot control the market moves. You can't control the profits. So if I'm in this trade, I'm thinking to myself, whoa, I'm up 0.6 Rs in 5 minutes. Remember, if that's $200, that is your risk unit, you're making over $100 in 5 minutes. If you have a $500 risk unit, you're up $250 in less than 5 minutes. Are you insane? That's an amazing profit. It's an incredible trade. So I take those off all the time. Now, you might be thinking, well, when? The answer is whenever you want. Whenever you want. Anytime. You can do that. You can do that for a long, long time in your trading. Just if you're up 0.6 Rs and just exit everything, great. Cool. Do it. Try it. Do it for a month and see how it works out for you. Here's where most traders mess up. You ready? Most traders will take another trade. Take another trade. That's what most traders will do. And that, my friends, is why a lot of traders lose. Most traders will take another trade. I won't. If I exit a trade for 0.6 Rs or less on my very first trade of the day, guess what I'm doing the rest of the day? I'm not trading. I'm taking that gain and I'm taking it into the next day. You might say, well, why? Why would you do that? Do you remember, ladies and gentlemen, earlier, my average loss? My average loss is 0.7. Question, Jeremy, is this an important thing to know? Yes, it is. You should absolutely know what your average loss is. And I'll tell you the answer. If it is not significantly less, like 30% less than 1R, you're doing something wrong. You should lose less than 1R frequently. And that doesn't mean you have to have a super, super, super tight stop. In fact, just the opposite. If you have a very, very, very tight stop, like you're getting in, bearish right here with a stop right here, and you get stopped out or triggered in this trade, one trade you get entered, stopped out, that means you're going to lose 1Rs entirely. You're going to lose a lot of 1R trades. So having a tight stop is great for those traders who are really comfortable with their trading. They're very comfortable taking trades. They know the process. They know the risks. They've accepted it. All those good things. That's absolutely adequate. But if your loss is much higher than 0.7, you really need to consider it. Consider getting it lowered by having a larger stop and then moving the stop over time. So if my average loss is 0.7 Rs and I make 0.6 Rs on a trade, and I'm normally 50-50 when I day trade, right? Most traders are. Most traders, when they trade, are around that 50-50 area. Then the math would say if you take another trade, you're probably going to lose on that trade mathematically. And if you do lose on that trade, you're going to lose 0.7 Rs. You're going to go green to red on the day. Green to red should never happen. If it does happen, it is your fault, and you were an absolute terrible example of a trader that day. It should simply never happen. Now, when I say green to red, I do mean realized green to red. I don't mean that the trade was up like $3. You're up $3 and then it kind of rolled against you and got stopped out. I don't mean that. I mean realized green to red should never happen. Like you lock in a profit for the day, and then, it is locked in, realized. You have it in your P&L. It is there. And then you go and lose it. That is the dumbest thing that you can do. I'm sorry. I hope that offends some of you because it kind of should. It is dumb. Dumb, 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 dumb. Should never do that. Ever. Because that's the one thing you can't control is profits. You have to protect them. So how can you go about protecting those profits? Well, one of the ways to protect those profits is, number one, don't trade a lot. And this, I'm telling you, this does go into the standpoint of when do you exit early and when do you hold a winning trade. All of this matters. All of this math matters. You have to protect your profits. So here are some rules that I have for protecting my profits. If I win on a trade less than 0.7 Rs, if I win on a trade less than 0.7 Rs, let me see that like that it's a 0.7. Trying to format it a little bit better. I guess I can't. Okay. So if I win less than 0.7 Rs on a trade, I'm done for the day. I'll just say day trade. If I win less than 0.7 Rs on a day trade, I'm done for the day. Simple as that. Congratulations. Not really that hard. That's it. I do that all the time. All the time. All the time. Think through it. How many times have you not done that? If I win on a trade less than 0.7 hours on a day trade, I'm done for the day. Number 2, if I have taken 2 trades on the day and the net result between both trades is less than 0.7 hours, I'm done for the day. Very easy rule. Simple, right? If I take 2 trades, I win on one, I lose on one, and my net result is less than 0.7 hours, I'm done for the day. Cool. Really easy. Nothing crazy about that. Here's another one. This one will revolutionize almost all of your trading. If you are in a winning trade, but it's going slow, you haven't realized a gain on it yet, you should not take another trade unless you are 100% confident you can lose. Let me do this 1 second. 100% confident you can lose less than your profits from the first unrealized gain. That should make sense for everyone. Simply saying, let's say I'm in this trade right here, match group, which I was. We took it in the morning room. It was a really good trade. And I'm around here somewhere. Okay, so we get triggered in here, exit a partial position here, exit another partial position here, which we did. And the trade's going down, coming down, and we're still up small, right? Technically, with this ginormous stop, and we've only exited 2 1/10 positions. So 2 1/10 and 2 1/10. That's 20% of our positions off the table. We still have 80%. We have not realized the full gain yet. And I'm thinking to myself, man, it looks like I might win 0.6 Rs maybe on this trade. Like kind of best case scenario at this particular point in time. I haven't locked in, I haven't done anything great. It's just hanging out. If I'm thinking that, then the question simply has to become, is there a reason to take another trade? And the answer is no, right? I'm not going to take another trade if I'm already in one winner and I haven't locked in and realized a really good gain on that winner yet. Because in doing so, I'm giving away profits that I actually haven't earned yet. Or I should say I'm potentially giving away profits that I haven't earned yet. That's like getting a payday loan. Taking a trade, a second trade for the day, even though you haven't won on the first one yet. It hasn't become a fully realized gain. Because when you have a fully realized gain, you then know how much money you can give back if you decide to do so. I hope this is sinking in. If you need to rewind this or pause it and really let this sink in, this is magic, this video, folks. This is incredible information. Because it's a combination of knowing where you're at for the day, knowing where you're at for the week, knowing where you're at for the month, and understanding should you take another trade or should you not, or should you exit that trade or should you not. That is going to help you determine should you exit the trade early or not. Here's an example. Let's take, I don't know, trader XYZ. Let's take trader XYZ, whoever that person is, an androgynous human being. And on the first of the month, they lose 0.84R on a trade. Okay, good. That's very good. They lost 0.84R on a trade. That's less than 1R. They did their job. Okay, they got to feel pretty good about that. Now, second of the month, they are up 1.12 Rs on a trade. Now, here's the cool part. We don't know anything else about the second trade. This is an entirely made up example, although I see it 1,000 times a month. The second of the month, they go up 1.12 hours on the trade. Doesn't matter if it's at a resistance, doesn't matter if it's at the low of the day, truly doesn't matter. They're just up 1.12 hours on that trade. What should they do? Now, the cool part is when I ask that question, you're all going to fire off an answer, and that answer most likely will be correct. Now, the hard part is, will you do this or not? That's the cool part about discipline. I'll do it all the time. I'm exiting. Okay, I'm exiting. It doesn't even matter where the stock is. If the stock hasn't made a new high or hasn't made a new low or it's just hanging out or whatever, if I can find any reason to get out for 1.12, any reason at all, just the most basic of reasons, a candlestick, a volume, something I don't like, anything, pick an excuse. Whatever that excuse, if it's a wick or volume or a news story or the stock's in a class action lawsuit or it's hitting the VWAP or it's hitting a moving average, pick whatever makes you comfortable. Do not care. But you're up 1.12 hours on the trade, I'm going to exit everything. And then what I'm going to do between the two trades, okay, is I'm going to factor in that rule that I just mentioned earlier, but a little bit of a different rule. I have a net result win between two trades, even though they're two entirely different days. I've taken two trades, and the net result between those two trades is only 0.28 R profit. 0.28 Rs. Now, here's a cool key. In this example, a lot of you might have thought, okay, Newsome, well, so in the first trade, you're up 0.84 Rs. Sorry, you lose it. You're down 0.84 Rs. How do you know when to hold above 0.84 all the way up to 1.12? There's a lot of space in that region. There's, right, that's 0.28 Rs. How do you know not to simply exit at 0.86 and take 0.02 Rs of profit? It's a valid question. And my answer would be, are you crazy? Who wants to make 0.02 Rs? 0.02. So if you're down for the day, right, you're in a bearish position, you're in a bullish position, the direction doesn't matter. If you are taking a trade and you're down for the day or for the week or for the month, and the trade that you are in is winning, it's working, it's moving, it's doing what you want it to do, then obviously you're going to want to hold for more than your loser was. That should be an obvious thing. Don't just get out at 0.84 Rs and break even between the two trades, because then mathematically, if you take the next trade, you probably will lose on it. Remember, if you're a 50-50 trader, if you lose on a trade and then you win on a trade, the next trade probably could be a loser. And then the next trade will be a winner. That's realistically possible, okay? You have this exact situation. Again, let's say this is the very first of the month, very first trade you've ever taken. You lose on a trade, boom. Next trade, if it starts working, okay, if the next trade starts working and you can make more than your previous loss, take it. And now what you're going to want to do is on your next trade, this 0.28 Rs that you have in the bank, when you approach it to this loss, your goal then is when you set that trade up, you want to make sure that you can lose 0.28 Rs or less. Now, that doesn't mean that you are going to only risk 0.28 Rs on the trade. You're still going to risk your full R, your full risk unit. It simply means you're going to place your stop in a position where most likely you can increase that stop at some point, hopefully to lose less than 0.28 Rs. Even if you're in a trade, you're in a position, and you have, let's say your entry is here and you put your stop way down here. Okay, right? You're in that position. You put your entry here. You put your stop way the heck down here. And you're like, okay, I don't think I'm going to lose on this trade. I don't think I'm going to be able to lose 0.28 Rs because, if it does this and this and whatever, I'll be able to increase the stop over to here and I'll be able to lose less than 0.28 Rs. If you do that, that's fine because that trade, right? So let's say that trade does slowly start to work, right? It does this and does this and does this, and you exit right here. If your entry was here and your stop was here and you get out there, that's still a win. That would be like a 0.3 R win. So you can take that 0.3 Rs and add it to 0.28. Now you're almost up at 0.6, and you do the same thing for the next trade. Same thing for the next trade is, okay, the next trade I take, I'm gonna do my absolute best to lose less than 0.6. And you can do that in all forms of fashion. It's entirely your call. Do you want to take that next trade with a half an R of risk? Do you want to take the next trade with a quarter R of risk? It's up to you. I personally will take that trade with a full R of risk again, and then I will simply do my absolute best to lose less than 0.6. And then the same instance applies. If I take another trade, right? So I lost, and then I have a winner, and then I have a winner. And the next trade, I go up like 0.35 Rs. I can exit everything. Why not? Let me exit everything and get out of 0.35. Because then if I have 0.35 R and I add that to 0.6, that's almost a full R. Now we have 0.95 of profit in the bank. 0.95. And then from there, I am pretty confident I'm going to win the entire month for whatever I'm trading, because 0.95 is almost a full R. So the next trade, right, the very, very next trade, if I have a 0.36 R gain again, I'll exit that entire trade again and be up 1.2 and some change for the month. And then I'm even more confident that I'm going to be profitable at the end of the month because I now know that any trade I take, the next trade I take, if it's a loser, I'm going to lose less than 0.7 Rs. The vast majority of the time, I'm going to lose less than 0.7 Rs. And when I do that, I will simply be able to have a profit for the month, and then the next trade will probably be a winner mathematically, even if it's a small winner. So you just have to follow the math. You have to go through the process and just kind of figure, keep an eye on those numbers and keep an eye on where you're at. And that is the distinction between when do you hold a winning trade and when do you exit early. The answer is, do you need to exit early to be profitable? Do you need to exit early to be profitable? That's the answer. Do you need it? If you need it, do it. Because here's a rule that you have to remember. You will never exit at the high or low of a position. What does that mean, Newsom? That means that you will always leave money on the table. It will literally always happen. Forever. Okay? Forever. It's always going to occur. Even if it's a penny or 2 pennies, like you're going to leave money on the table. So just accept that. Let that sink into your very soul. It will always happen. I know some incredible day traders. Some of the traders that I have taught and that work with me in the day trading room are far superior to me. They're just inordinately amazing. And even then, everyone's going to leave money on the table because you don't have enough money to take every trade that you want to. Nobody does. Warren Buffett himself has mentioned countless times that there is more money-making opportunities in the market every day than you can take advantage of in a lifetime. You don't have enough money to be in everything. Nobody does. And if that's the case, since that's the instance, we simply know that it's a guaranteed fact that you will always leave money on the table. So don't worry about it. Now, how did I realistically play match group? All right, so let me go show you. We're going to go to the daily chart. I'm just going to kind of walk you through this trade. I'm going to do a few other examples, but here is the daily time frame. And look at this perfect gap. This is perfect in every way. Everything about this is perfect. You're welcome to print this out and keep it on your refrigerator, whatever helps. This is an all-time high resistance on match group. All-time high, big upper shadow candle right here, big bearish candle here, big resistance here, big resistance here. And the gap was just a super small, tiny, cute little gap right above resistance. There was nothing here, nothing, zilch. Where it opened was the highest price ever. But we can see that there's a lot of traders trapped. Okay, the candles that I'm pointing to, these are the most important candles. This candle right here, a lot of people are still in short. Look at the volume. Huge bearish volume. So there's a lot of people still in that, hoping that it goes lower. Huge bearish candle right there. Pretty big bearish candle right here. Nice resistance right here. Nice resistance over there. So there's a lot of shorts that are trapped on this. And at the end of the day, it was just a bullish gap and go. Bearish candle gapping up, barely above resistance, barely above the gaps. That's my favorite type of gap. I love the gap when they just barely clear that resistance. Just like my ebook, if you ever want to get a chance to check it out, Retire on 3K, go to revolutionize.com and check out this ebook. This was a bullish gap and go that we played on the 1 minute chart. And what I'll do is I'll kind of come back over here and show you the initial setup. And I'll show you my stop loss movements and everything. So we'll just kind of pull up each one. And by the way, it's very important for you to take these kind of notes. All right, you want to know all about how you trade so you can go back in and go, hey, okay, I've done something better. Oh, that one didn't work. Give me 3 seconds. All right. So I just want to show you what I was looking at the exact moment in time that we took these trades. And yes, this was an official trade in the morning day trading room that I was there that we placed. All right. And I remember the only memory that I have, which is good, is I have a photographic memory for charts. Let's kind of go through this. First candle that gapped up. Remember, this is a bullish gap and go. Huge bearish volume out the gate. So I'm automatically thinking, okay, well, this is probably going to go lower. That's what I thought. But this candle is a buying candle. It did have a little bit of a lower shadow, and it had a nice shaved top. The high of this candle and the open are the exact same, 63.58 and 63.58. That means as soon as it opens, everyone's sold. Huge volume. So when the next candle closed above the high of that bearish candle, were tons of people trapped? And the answer is absolutely. Yep. Loads of people were trapped. In fact, we can look at the volume. If it makes you feel better, look at the volume on the left-hand side. I'll show you where this is. Do this. Keep your eyes on this number right here. I'll hover over it, and 126,000 shares were traded. We could say then 100,000 people were trapped on this position. They got in short, and then they immediately got hosed. When this stock closes above the high of that candle, I did something very simple. I said, okay, let's see if it pulls back, and then I'll put my stop loss down here. Well, not exactly down there. It was a little bit lower than that, but we'll look at it in just a second. That was pretty much the setup. So here it is. That's it. But this is when it was happening. 1 minute chart, 3 minutes into market open. A lot of people are going to get scared by that candle. Tons of people are going to be terrified when that candle comes in. Why? Why are you scared? Buy into weakness, not strength. Buy into weakness. Repeat that over 1,000,000 times in your head. Buy into weakness. When the stock is weak, that's when you want to buy. Do you know that it's going to bounce? No. No one ever knows if it's going to bounce or not. Never. So get in and find out. Okay? If you don't know it's going to bounce, great. That means it's probably a good trade if you're in bullish. Do you know it's going to bounce? Never. You'll never know. You just got to realize that. You have to take into consideration that you, nor I, nor anyone else ever will know if a stock is going to bounce or not. You have some factors that can help you. The fact is, this was a bullish gap and go. The trend on the daily chart was bullish, and you have a bearish candle with a little bit of buying pressure with this lower shadow. Bearish candle, tons of volume, gets trapped. So just based on those three factors alone, I'm going to get in and I'm going to set my stop loss. And I'm going to lose on the trade if I'm wrong, and I'm not going to lose on the trade if I'm right. And that's it. That's it, ladies and gentlemen. That's the whole cycle of this trade. And the cool part is I already know where I'm going to take profits. I'm going to take profits when it makes a new high. When or if this stock does one of these numbers, bloop, and makes a new high, I'm going to exit some profit. Always, 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 I'm going to take a position off the table. Then the question becomes, how much am I taking off? And that will depend on how I'm doing for the day or how I'm doing for the month. Now, again, if you're saying, why, Jeremy, why would you exit when it makes a new high? Because that's what markets do. When a stock does this, this, and this, what's the next movement that it's going to do? This, and then this again. Now, again, am I going to exit all of the position up here? I could. It depends on how I'm doing for the day, how I'm doing for the week, and how I'm doing for a month. At this point in time, on the 8th of May, I think I was up 7.9 R's or so. I don't know for sure. So if I'm up 7.9 R's on the 8th of May, do you think I'm going to hold this trade for more, or I'm going to take the trade early? And yes, you're exactly correct. You're 100% correct. If you said, I'm just going to hold this trade for more because I'm already up nicely. I have a cushion. I have a base coat of profits for the month. Now, when I go up like this, I already know in my mind that I'm never going to go below 5 R's for the month. Never. So that's like my baseline. I put a trailing stop on my P&L every single month. I will never let it go below a certain price. Ever, 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 ever. If it does, guess who's just going to stop trading for the month? So right now, for the month of May, I'm up around 11 R's. So now my trailing stop is 7. 7 R's, that's a good month. It's a really good month, 7 R's. So I have a 4R trailing stop, you could say. So every single trade that I take, I know I only have 4 R's of risk left for the month. If I take a swing trade, if I take a day trade, if I take an option trade, I have 4 R's left for the month that I can take. So I have that trailing stop. And as this number grows as well. Now, what if, let's do another example. What if I was down, I was negative 0.69 R's for the month? What am I going to do? I'm going to try and win more than 0.69 R's on this trade. Now, the question is how much more? My answer is don't be massively literal. Okay, if you go up 0.71 R's and you take all of your exit there, that's dumb. It's not enough profit. But if you're actually in a winning trade, congratulations, right? If you're down negative 0.69 R's and you lose, well, you're already losing for the month anyway, so just lose small. Do your absolute best to lose as small as you can. Put a nice, loose, comfortable stop so that you can eventually increase it and hopefully lose less than 1 R, and then you'll slowly get out of that that hole. Rat hole, that's what I was trying to say. I don't know if that's even a thing. So don't be incredibly literal, all right? If you're down 0.69 R's, try for more than that, but not like 0.71, okay, just more. If you can get, for example, let's say, I don't know, 0.98 or 1.12 or 1.3 or a flat even 1, somewhere around those numbers, those are great. If you can hold for one of those instances, fantastic. Let's say the stock trade hits 0.98 Rs and you just randomly want to take some profit off of there and move up the stop a little bit and try to hold the rest for 1.3, and then, through it total, the whole trade, you'd win 1.12. Great. That's fantastic. Good trade. Do your best to make more than that 0.69 Rs. More, not like a little bit more, but more, a lot more. And in this situation, you can see my stop was nice and far below this wick, right? It wasn't exactly right there because this is very early in the morning. This is 2-3 minutes into market open. And I have seen far too many trades come down, bloop, wick down, right below that stop, because that's where all the stops are at, and then bounce. It happens a million times. In fact, this would be a really good spot to enter, actually, with the stop loss down here if this wasn't such a bullish gap. And I said to myself, if this stock does stop me out, I will try it again later in the day. I will try it again at some point. And again, it all comes down to how you're doing for the day, for the week, for the month. Okay, so this was the first setup on Match Group. Here's the next setup. So at this point in time, I have already exited 0.1% of my trade up here. Not the exact high, but when it started popping, boom, 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 it was popping, it was working nicely. I exited 1/10 of my position there. And this was my target, 66.30. That was the target to exit all of the position, 66.30. How did I come up with that number? Very easy. 66.30 is a little bit more than 2 Rs. 66.20 was the 2 R target. So I wanted, because since I exited 1/10 of my position, I knew for almost a 100% certainty that I'm not going to lose a full R on this trade. Does everyone follow me so far? So if I exited 1/10 up here, this is how I moved my stop. I moved my stop from where it says old stop to right here. Just barely moved it. And that is very frequently what I do. When I exit 1/10 of my position, I move the stop like pennies. Pennies. Super, super small. Really, really tiny. I just move it a few pennies, and then I wait a little bit longer. I wait another 30 minutes. And so at this point, this is right around 9 o'clock, right around the first 30 minutes of the market. This is a 3-minute chart now that I'm kind of watching most of the trades on. It's a 3-minute time frame. And what I do is I take my stop loss, and from here, I bring it up to here after I exit my 10th, and then I bring it up again. And I put it below the 10 EMA on the 3-minute chart. So this way, worst case scenario, if the stock rolls over, I'm gonna lock in a win on the day. All right, I'll lock in a win, and that'll be that. Let's see what this next chart is. Next chart, beautiful. All right, so this is another good chart. So what we have here is the other answer to how do you know when to let your winners run? That's a beautiful one, okay? And here's the answer to that. If there is 0 chance you can lose on the trade, hold as long as possible. That's the answer. That's it. If there is 0 chance you can lose on the trade. So at this particular point in time, I have exited a tenth of my position around here, right around here. Now you might wonder, well, Newsome, this thing has made a new high. Did you exit another 1/10 of your position? And the answer is yes. We exit another 1/10 of the position right here, somewhere around that particular price. Why? Why in the earth would you do that? The answer is because it made a new high. I'm selling into strength. So when the stock does this, and it does this, and it does this, I'm going to exit some at the new high. I'm going to take a little bit of profit. I took another 1/10 of my position off the table. But Newsom, you paid commissions for that. I did. Commissions were indeed paid. Yeah, you're absolutely right. I'm gonna end up making $1,000 on this trade potentially, and if it hits the targets for some of the traders, depending on what your R is, and I'm gonna worry about spending $10 in commissions. All right, whatever, man. I mean, whatever you focus on, right? Now, here's where it gets fun. If there's zero chance I'm gonna lose on this trade, I'm gonna hold as long as possible. One other thing that's really fun for me is if I'm holding a trade and there's, again, no way I'm gonna lose on the trade. Once I move that stop to where I can't lose on the trade, once I move the stop to where I can't lose, I don't move it for like 3 hours. And again, it depends on the time of the day. Obviously, if it's very, very late in the day, I'll just exit at some point. But I don't move that stop. Once I move it to a place where I can't lose on the trade, why are you moving it again? If you can't lose and all you're gonna do is lock in profit, why are you continuously moving that stop? Go on about your day. Go do something that you wanna do. The other thing is, if I'm in a trade and all it does is work, I'll keep holding. What do I mean by work? Okay, volume increasing, making higher highs, higher lows, or if you're in a bearish trade, lower lows, lower highs, S curves, just all the things that I want. Everything you could possibly want in the trade. So if I'm looking at match group, and again, you could say, well, Newsom, why'd you hold for 66.53? Why not exit everything right here at this resistance? I could have, but the trade was working. Volume, look at the volume. Volume was great there. Volume was great there. Volume was good here, good here, good here. You were making an S curve. Look at this S curve. Boom, there's one S curve. Came down. Here's a second S curve. It's working. I moved my stop to where there's no chance I can lose on the trade. I'm already up for the month, and I know without question, that I'm gonna lock in profit on this particular trade. Why not? Now, here's the cool thing. On this particular day, this is the 8th, you will see that I did go on to take another trade. This is Boeing, and I ended up losing on it, and you'll notice that I lost 0.64 Rs on the day, and that was the only 2 trades I took that day. Match group and Boeing. I won 2 Rs, and I lost negative 0.6. This one was bullish, and this one was bearish. So I took 1 bullish trade, I took 1 bearish trade, and I lost less than my average loss on Boeing. So if I do take 2 trades, this was the point in time where, and again, I'll pull up the loser on Boeing as well. Kind of pull this up. And when I took this trade, what you'll notice is I put the stop where I could most likely lose small in the trade. So when the stock, this is the 1-minute chart on Boeing, when the stock broke through support, retested support, came back down and was trying to form a base, my thought was if it does this and then breaks lower, it could keep going down. Could. Maybe it will, maybe it won't. But notice where I put my stop. My stop is almost $3 away. It is really far up there. So most people would put their stop right there, right above that previous pivot. But I went a little bit farther because at this point in time, you'll notice this is 9:05 Eastern, sorry, Central, 9:05. So I had not exited match group yet. So you remember my other rule? I will only take another trade if I am 100% confident that I can lose less on the second trade than I'm going to win on the first. And that was already apparent with match group. Based on the risk, based on the calculations, based on some of my exits, I knew that there was no way I was going to lose less than that on match group. Sorry, if I lose on Boeing, I knew there's no way I was going to lose on Boeing more than match, because if I got into this trade, I'd be able to immediately take my stop loss, bloop, put it right there, And worst case scenario, I was going to lose like 0.6 hours on Boeing. Are you all kind of seeing a connection here at this point? That's what I did, is I took this second trade, I put my entry at a nice little level, right? You had 4 bearish candles in a row, so I waited for this bullish candle to come in. Once the bullish candle came in, I set up the entry, set up the stop loss, and put the stop loss in a location that most likely I'd be able to lower it and lose less than a full R, which at that point I had locked in a profit on Max Group. There was no way I was going to lose on it, calculated the gain that I was going to make on Max Group, worst case scenario, and just simply played Boeing. And I played it in a different direction. That should also be kind of a key standpoint. Is I took one trade bullish and I go, okay, well, I'm gonna take another trade bearish and we'll just see if, what the market gives us. So match, back over to this one, back over to holding your winners. Let's go look at what this actually does on a 3-minute chart, because it was kind of a fun little move. So if we go back over to here, you'll notice that my stop loss was 64.35. So that means my stop loss was placed right here. 64.35, right below that candle. And remember, I just mentioned that I had already moved my stop where there's no way I was going to lose on the trade, so why continue to move it higher? A lot of traders wanted to move their stop right here. And that wouldn't have been a bad thing. That would have been a very, very profitable trade. There would have been nothing wrong with that at all. However, just looking at it and knowing what knowing the volume, I like the volume, everything was good about the trade. I just allowed it to make another retest, because why not? I had already had my stop in place, or I wasn't going to lose on it. So again, I'm normally going to have that stop for like another 2-3 hours before I do anything with it, because there's no way I'm going to lose on the trade. So why worry? I mean, again, everything is working. Everything looks great. So where did I get out of this trade? We got out of this trade right here. And then again, you might say, oh man, what a moron. You exited and left so much money on the table. Yes, I did. And I will always do that forever. Always. I always leave money on the table. So will you. You are not good enough to pick the top of the stock ever. Doesn't matter if you use a fib. Doesn't matter what you're using. You're not getting out the top. So stop trying. You're not that good. No one is. It might happen to you once every 7,000 trades that you exit at the exact top or the exact bottom. But don't try it. Don't be the hero. Just exit. So I took everything at 2 R's, and that was it. That was the whole explanation. Like, why would you exit there? Because I was at 2 R's. Why would you exit at 2 R's? Why not go for 3? Because I just mentioned earlier, I like exiting at 2 R's. 2 R's is a wonderful profit. The other thing to really, really, really keep in mind, my friends, is if you're in an entry, so let's say you take a trade here and your stop loss is here, and then you move your stop from here to here, and your and the stock is hanging out right here. That actually is a 1-to-1 risk-reward ratio. You might go, no, that's impossible. That's impossible, because this is your stop and this is your target. This is your profit. But yeah, you moved your stop though. Once you move your stop, now this is the risk and this is the reward. Very important takeaway in the video, my friends, because once you move your stop, you have decreased your risk. Therefore, you have increased your risk-reward ratio. So that's why I love barely moving my stop, because as I move my stop just inches, it doesn't cost you anything to move the stop. You just drag and drop it in your broker or whatever. As you're barely, just slowly increasing that stop, your risk-reward is always becoming better. Now, your P&L won't know that, but your chart and your trading will. So again, if you took this trade, entry here, stop here, and after this candle, right, nice lower shadow, indecision candle, you take that stop and you move it right here below the low of this candle. And then you exit the trade at the high of the day, right? You exit the trade right here. That's a great trade. That's right about 1R. Congratulations. 1R is beautiful because that means the next trade you take, you should focus on losing less than that R. You should focus on protecting that R. And that is how you know when to get out early and when to hold a winning trade. It comes down to math. It does not come down to the chart. It comes down to how you are doing for the month and for the day and for the week. One of the biggest things I talk about for all of my coaching students is if you go up in the beginning of the month, there is no reason to lose for the month. Let's say the first 3 or 4 days of any month, doesn't really matter. Input the month, September, March, May, June. The first 4 trading days of the month, you go up 3 R's, you should win on the month. There's absolutely no reason for you to lose on that month. Because once you have 3 R's, you want to protect those 3 R's like they're your children. This is the principles of becoming a profitable trader. That's what most of you are seeking. You're seeking the ability to make money trading the stock market. But the making money is part of the process. You need to focus on the process. And as you master this and understand the process, once you get that down, you can become more flexible with your expectations and continue to be rigid on your rules. You can become more aggressive on holding a trade longer or having a little bit of a tighter stop or kind of practicing with some of those setups and entries. You can start trading exclusively on the 1 minute. There's a lot of things that you can do, but you have to become profitable first. That's what a lot of people skip. Is they skip the, are you actually making money doing this? They skip that part. They just dive right into the really, really, hard, challenging, difficult part of the process, and they're not making money. It's like, okay, well, you're not making money doing it the harder way, so do it the easy way. This is an easy thing to do. It's simple, but difficult. The difficult part is just following the rules of trading, following specific set of rules. Like this one. If I have 3 R's at the beginning of the month, I'm going to protect those R's like they're my children. So let's say day 5. All right, day 5 comes around. First question, am I going to take 3 trades at once? Yes or no? And the answer is no. Why would I do that? I only have 3 R's. So if I take 3 trades on day 5, and I lose on all of them, I'm going to lose those 3 R's? That's dumb. So I'm not going to do that. Secondly, am I going to take the same exact trades on day 5? 2 gap down fades? No. Or 3 gap down trades or 4 gap down trades? No, I'm not going to take the exact same trades either. Even if that's my strategy, even if that's all I'm focusing on, I'm going to take 1. I'm going to take 1 and see if I can win on that one. I'm going to take 1 trade on the 5th because, again, all I have now is I have 3 R's, and that's it. That's all I can lose for the rest of the month because there's no way I'm going to go to 0. No chance at all. And it doesn't matter if it's the beginning of the month, end of the month, middle of the month. You can still do this and apply this concept. So I'm not going to take the same types of trades that day either. Day 5. I'll take one bullish, 1 bearish. I'll take 1 bullish gap and go. We'll take 1 bearish gap and go. If you're focusing on an exact strategy and you're just trying to master one strategy, that's fine. Just take 1 trade that day and see if you can lock in a profit. If you can't and you lose on the trade, that's fine. But let's say you're at 3 R's. You take a trade, whatever you're trying to focus on. Let's say it's a bearish retest gap, and you go up 0.47 R's, and something comes up, a phone call, a business meeting, you have to do your job, your kids are screaming,
your wife's coming home, someone wrecked a car, whatever it is. You're up 0.47 Rs, you're in a bearish retest gap because that's the strategy that you're focusing on for the month or for the quarter or for the year or for the day or for the week or whatever. This is what you're focusing on. Do you take this profit? And the immediate answer should have been yes. Yeah, sure, take the gain. If you're in a trade, because that's the only thing you cannot control, I'm gonna keep pounding that into your brains. It's the only thing we cannot control. So since we cannot control our profits and we're actually up on the trade, good grief, just exit everything. And now for the month, you're up 3.46 Rs because of commissions or whatever. 3.6, 3.45, you're up something. So the very next trade, if it's the next day or if it's the next trade, I am going to go, okay, I have 0.46 Rs to take the next trade with. Now, that doesn't mean that that's how much I'm going to risk. I'm going to risk my full R. Okay, I'm still going to risk one full R on that trade. I'm just simply going to do a very good job of having my stop nice and far away so that I move it adequately. Hopefully, I can lose less than 0.46. What if it doesn't happen and I lose a full R? Okay, now I'm at 2.46 Rs for the month. The next trade, I'm going to do everything in my power to lose less than 0.46. And what if you go, Jeremy, okay, cool, well, it doesn't happen again. So now you're at 1.46. What do? Oh, I start locking it up real hard. At this point, I mean, we're wherever we are, 8th, 9th day of the month. I've lost 2 full 1R trades in a row. I'm going to be very, very cautious on the next trade that I take. I might even wait 2, 3, 4 days. I'm just going to wait as long as possible because now we're getting to the danger zone. Highway to the danger zone. That's where we're at. We're at the danger zone right now because one more trade, and if I lose another R, which I don't think I've lost 3 Rs in a row in like 2 years, but if I do lose that full R, I'm probably not going to take another trade for another week because now I only have half an R, and I'm going to have to battle that back. So let's say it happens, okay? Boom. I lose a full R, and now I'm at 0.46 Rs for the month. Guess who is being conservative as possible? This guy. So the next trade, I'm going to have like a $10 stop. I mean, it's going to be massive. I'm going to be so conservative on that trade. I'm going to be really, really cautious, super conservative. And the next trade, let's say I'm in it and I go up 0.23 Rs and I see any reason at all to exit. It doesn't matter what the reason is. It could be anything, a moving average, a VWAP, a candlestick, a volume, something I don't like, something that's scary, a new high, a new low, whatever. I'll take the profit. I'll take it and I'll be up after commissions and everything. Let's just say I'm up 0.6 Rs for the month. Okay, we'll shave this one off and we'll shave this one off. A lot of trading, let's just say the commissions are factoring in. So now I'm at 0.6, but I breathe a sigh of relief because I'm like, okay, at least I won on the trade, but I still have less than 1 R in the books. So what am I doing? The next trade, I am super conservative. Again, huge stop. I'm waiting for days just to find the exact trade that I like. I'm really, really cautious. I'm really, really profitable. And let's say for some reason I lose a full R on that trade. Now I'm negative 0.4 Rs for the month, and I've broken my rules because I went from being positive to being negative for the month. Oh, man. That means I have to end the month profitable, or otherwise I face the pain of breaking my plan. I have to. So that next trade, I'm going to take another trade. At this point, I'm negative. At this point, I'm already below where I'm at, and I will have my cutoff. I will have the stop. I will have the location where I just stop trading fully for the month. But once I go green to red for that particular month, if I don't finish profitable, then I break my plan, and you guys are going to see the most epic video of all time, and it's going to be horrifically terrible. So the next trade I'll take a 1 R trade, 1 R risk, and I will, again, wait and be as patient as I can, try to find the absolute best trade setup possible, and I'll take the trade. And if I go up, plus 0.6 R's or something, I'm probably going to take it and have 0.2 R's, and I might just be done for the month. It's very possible. I don't know. It'd have to depend on a lot of different factors. Do you see what I'm saying? Does that kind of make sense? I can make 3 R's last financially and just in my account. I can make that last for weeks because I'm going to be conservative on every trade that I take. I'm going to really, really be patient. I'm going to really watch, and I'm just going to take small gains frequently. If I'm actually profitable, I'm going to take a lot of small gains. If the trade actually is working, if it puts in volumes, if it puts in candles, if it breaks out, if it makes new highs, if it works, then I'm going to hold it as long as I possibly can. I'm going to move my stop eventually to a place where I know for sure I can't lose a full R on that trade. And I'm just going to absolutely hold as long as humanly possible. But if I need to, if I'm at a spot where mathematically I need to exit early to lock in a gain to give myself some cushion, then I will. I do that very, very frequently. So let me go back to this Boeing trade to show you how I ended up moving my stop. Okay, so this is the stop, and I did exit early on this trade that I'll show you. So here's Boeing. All right, we talked about that a moment ago. I talked about getting into the trade and lowering my stop. So now this is a 5-minute chart. This was the 1-minute time frame right here that I set the trade up under. And Boeing came down, came up, broke, and then immediately bounced. Had this really nice little double bottom. So let me go to a 5-minute chart and show you the candle that told me this trade was just not going to work. And I exit early. Took the loss. It was a 3-minute. I'd zoomed in because I zoomed into the time frame. Yep, right here. Okay. So on this candle, I lowered the stop after that candle formed. All right. So if we go back over to the 5-minute, once that candle formed, I lowered the stop from 356.93 to 356.24. So almost a full dollar. So I lower the stop, and then once this candle comes in, that's a very nice hammer candle. You can see that it's retesting the neckline of this double bottom. Boom, 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 neckline retest. Once this candle comes in, is there any reason to be bearish? And the answer is no. So once this candle comes in, again, I'm losing on the trade. I know I'm going to lose on the trade. I exit. As soon as it pops above that candle, I get out early. And I lost on the trade, ladies and gentlemen. It was a losing trade. I 100% did not win. We did not win on that trade. But what was very useful is this is the early exit, pretty much right there. This is the 5-minute chart. Because again, I could see that this was a trap. I got embarrassed. It obviously didn't work. Here's your one white soldier candle right here. One white soldier candle, stock closes above the 20 EMA, closes above the 10 EMA. You got this little double bottom coming in here. We broke out, we retested, we started making higher lows, so I just got out. Got out of the trade, took a 0.6 R loss on it, and then just kept holding match group. And a match group ended up being a 2R winner, and it was up 1.3 R's and some change for the day. And that's a beautiful, beautiful day. 1.3 R's is incredible. So the other tip, I guess, if you made it this far in the video, that means you really, really want this stuff. The other tip is 96% of my trades exit less than 2 R's. 96%, maybe not exactly 96%, but 94.5, something like that. The vast majority of my trades, I will exit less than 2 R's. Especially if I've already moved my stop. And once I've moved my stop, I've decreased my risk, which increases my risk reward. Because again, keep in mind, folks, if I can make 1.13 R's on a trade, that is much more than my 0.7 average loss. So as long as I can keep this spread alive, losing less than an R and winning more than an R. And then when I do that, when I make that transaction, when I actually go up, then I keep it, I hold it, I'm profitable on it, and I use that math to ensure whatever the next trade I take, I'm gonna do everything in my power to win on that trade, create that cushion, and continue making it bigger and bigger and bigger. Those are the challenges that haunt most traders, is getting into the trades and just not keeping their profits around. It's very rarely the entries that haunt most traders. Sometimes it is. All right, sometimes it is. If you think that's the issue for you, or if I have kind of hit a nerve on this video and you're thinking, man, Jeremy, this is me, you summed me up perfectly, let's work together. Email me, Jerremy@reallifetraining.com. Shoot me an email and let's figure out what we can do, what we can craft. Maybe it's some one-on-one coaching, or maybe it's me just looking over your trades or some form or fashion. Let's just discuss what I can do to help you, because if we go through this whole product, this video, and you think that it's all these things are you and all these problems, these are your problems that you're having, maybe you need some accountability. Maybe you need someone there to hold your hand and really say, hey, you're doing this wrong, you're doing this right, stop doing this, continue doing that. I can be that person for you. So anyway, just shoot me an email if you want. I hope this video was helpful. Thank you so much for watching it. You are an incredible human being. And until next time, love life, and trade it. Bye.